Edutrainment Workshops, the insurance industry's leading education and training platform, presents Life Insurance, the entry-level series, the products, the underwriting, and the planning applications to position your practice as the premier provider of insurance products in your community. Get on board, get on track, get to where you're going. And now, your Edutrainer, national insurance columnist, Steve Savant.
Well, welcome everyone. I'm Steve Savant, your Edutrainer and coach for our Edutrainment Workshops. And we're doing our entry-level introduction into life insurance. And all this week, we're doing our special Introduction to Survivorship Life Insurance, or as some people call it, Second to Die. And we want you to go out on tour, because we're going to be on this illustration system all today. So we want you to go out to Lincoln Benefits illustration system called the Eclipse software. And Eclipse software system, it's really a great tutorial. We use it all the time in our teaching. And it's really good for a beginner to walk through page by page with us. So download it. Don't watch any more of this video until you download this. Go out to LBL's software site, www.lblsales.com/ETW. As soon as you come to their page, hit Run Installer and download their illustration, and you'll be able to go page by page with us. Also, their Lincoln Benefit and their parent company, Allstate, have put out an excellent tools for marketing campaigns and basic data collection and even policy review. It's excellent. It's showing at the bottom of our screen, but also the document that's attached to this actually has the URL address on it. It's kind of long, that's why I'm telling you to go out there and do it. All you have to do is copy and paste it into your browser and you'll be right here. And when you come here, you'll see some of my favorites, Facts of Your Life booklet. It comes in booklet form. It also comes in an attachment email, and you definitely want to use this. Not only is it free, but I think it really helps prospecting and existing clients. So it's something you'll want to really get a hold of. Again, it's absolutely free. Just go ahead and out to the site and get it. And while you're out there, they have prospecting letters and postcards for you for your campaigns and a lot of your marketing ideas. And all these are already done for you. Just heads up, even though it's compliant, approved by Allstate, if you're with an organization, if you're a registered rep, your broker dealer is going to need to approve this if you're a FINRA registered rep. So also, if you're in an agency that actually has to look at certain compliance ideas, you have to run this by them as well just to make sure you're compliant. And then the last thing I want to talk about is if you say, Steve, I need to go back to somebody, I forgot where to go get this, I saw this out, and many of our shows are independently posted by others on Google, and you say, if that isn't the first show, you need to go out to our website, www.brokersalliance.com. As soon as you come to our homepage, hit the on-demand video button, and as soon as you do, it'll bring you into all our edutainment workshops. And again, as I've been saying, all these classes, you really need to go back to the beginning to establish and get the foundations and the cornerstone of our thinking and how this works. Because if you haven't done that and you're going to see today's show, you may not know what you're doing, especially if you're new to our industry. And again, remember, a lot of people are coming in from the medical industry, property casualty, banking, registered reps. So a lot of people are being introduced to life insurance as a way to have a career, and it's a great career. I've been in it 30 years and really like it. Just go out to our site, and not only on our site do we have our edutainment workshops, but we also have our daily internet broadcast, the Business Insurance Zone. Huge show. We really enjoy doing it, and again, you'll see it, and it's fantastic. Now, let's just go out to the site, and what I'm going to do is go to our Lincoln Benefits software. And yesterday we left off right around here at living to full life expectancy. Now, I've said this, and we did this about, a week or so ago, where Ken Davis and I did a whole show on marketing to the fiduciary community. And one of the big items in the fiduciary community is internal rate of return. Now think about this. Normally you'd say, well, who cares, Steve? It's just, I see the IRR. But we're measuring economic viability. Is this a good deal or no? So if I hold this contract to my life expectancy, and I'm sitting there, they're showing it at 25, which is at 7.84 tax-free, as long as it's set up correctly. And that number is 7.84 tax-free guaranteed at that time, 25 years out after issue. But let's just be a little more protective, a little more conservative. I say 30 because who knows how long mom's going to live, the female on this boilerplate. That puts that at 5.54 30 years from now. So she's 95. So I'm exacerbating the argument here. 95 years of age at 5.54 tax-free, guaranteed rate of return. So to me, that's economically viable, and there's nothing in the market that's going to give me the same kind of guarantee and the leverage using discounted dollars. Now, the flexibility of this, I really like this. It says, what's the annual cost of funding? If I want to explain the math to a client and maybe they're not really into internal rate of return, or they don't want to look at our cost indices, they can look here and say, here's how I can figure it out. I can take my annual cost of funding, and that is my total premiums paid, less any surrender charges, and take the number of years of coverage, and that'll give me my annual cost of funding. So that's what, when I'm looking at this, I'm just trying to see another way to look at how can I explain it. And then what they do is they map it out in a pictorial. This is why I like this software. It's so easy to use. It has a built-in embedded sales track to it. And if you're uncomfortable with expressing it in a spontaneity, you can go ahead and use this as your track. So here we are, your cost of funding. It shows after 10 years. And also, in this specific case with Lincoln Benefit, Lincoln gives a refund, an option for refund. And it's really great because I had paid $129,783 over the last 10 years. If I have buyer's remorse for whatever reason or the law changes, I have the flexibility to pivot and I could take my money back. That's $116,800 and I shelled out the difference and I had 10 years of coverage a second to die. If I had 15 years, my number, whatever I paid in this guarantee, is now my refund. I like the flexibility of this because the law changes so much, or it just keeps modifying itself. You never know what's going to go on, but you want the protection, and here's a great way, and not very many carriers, Lincoln's one of them, that gives this kind of flexible cash value out. I think it's really a great idea. Now, what it does here is it also summarizes the tax advantages. So if you're, say, well, I'm really not used to taxes and so forth, and I don't know how to explain it, this walks you through a basic battery, point by point, in these talking points on the summary of tax advantages. It first talks about the death benefit, and it's generally income tax free. Again, there are some rules that you have to understand. Sometimes it has to be owned by an irrevocable life insurance trust to make that statement true. It also talks about tax deferral on cash values. As long as the contract's kept in force for the life of the client, this is going to accumulate tax deferred. There's not going to be any taxes on this. And then the last, an estate tax-free death benefit. Again, depending upon how it's owned, I can transfer that to the next generation to pay taxes, charitable giving, make legacy planning, all kinds of ideas that I can do, even income, as I mentioned yesterday. There's all kinds of great ways. Now, about this specific quote, it then does a redux of what you have already quoted, so the client says, oh, no. What if he saw this and he goes, preferred non-smoker? No, I am a smoker. So I like going through it this way because here I am, male, female, preferred non-smoker. My client stops me and says, oh, I'm really a smoker. And then I can change that because it's going to make the numbers. And this kind of reminds me, oh, I have to walk through this with the client. We're looking at $1 million worth of death benefit. He looks at the premium and says, oh, that's too much. Let's half that. Let's do $500,000. Instead of 12.9, it's going to be somewhere around 6, whatever it's going to be. And then I'm using option 1, which is the level death benefit. Again, this is a great tutorial. You haven't seen any of the big caveats and all the kind of disclaimers and disclosures that you're going to see in most illustrations. That's why we like this. It gets right to what I call a basic sales idea. And it walks you through it. It talks about the coverage protection guarantee. And remember, they're saying that for $12,978 paid for $1 million of contract on a male-female, age 65, preferred non-smoker, they pick it up. You pay the guaranteed premium, they pay the guaranteed death benefit. That's why I like this initial plan premium. It's paid annually and it's guaranteed. Here's the required minimum. Now watch this. Oh, I don't want to bypass that. The required minimum premium payment is the lowest amount that's required to purchase this policy. So we're at the guarantees, but what if you wanted to get in lower? You could actually pay, for the first 10 years, you could pay $6,681 for the first 10 years, and it will remain in effect as long as the total premiums, less any partial withdrawals, and that's not going to happen if you're really doing this for a long haul, but if it did, you could, less any debt equals or exceeds the total amount of required premium. So as long as you don't take any money out, that number is right. And for the first 10 years, some people say sometimes, you know, I just need second to die. I don't know what the issues are. I'm just going to buy a second to die now for 10 years, kind of like buying second to die term, and I'm going to buy that at $66.81. Now, if I want to come back, I have to find out, does this contract or any other contract that lets me come in at a minimum number, does it let me do a catch-up provision to reestablish the guaranteed premium? Because right now, I'm only guaranteeing coverage for 10 years with this lower premium. It's almost half the premium. So it's an important feature. You may or may not want to use it. And then it talks about the guideline, annual, and single, and the 7-pay test. And I wouldn't spend too much time on this with the client because that's most of the time that's a confusing kind of a law, but it has to be there for legal. And look at the guaranteed refund amount. Again, it walks you through the basic guaranteed refund, the thing we talked about, so that you can actually understand what am I getting, and if I have any kind of buyer's remorse for whatever reason, what is my cash out position less any surrender charge. Now, they also talk about loans and also using the split dollar and exchange rider. We're going to talk about riders, all about these kind of things all next week. It talks about the premium year, the age of the client, and it talks about the youngest insured's age at the end of the policy. So if I have a male 65 and she's 65, it's the same. But if there's differences, it's going to be the youngest one that we actually make the calculations on. And it then describes and goes through a battery of definitions, net surrender value, all these kind of issues, and then we get to the actual illustration. Now, when I'm looking at the illustration, the basic one, I'm looking at $12,978 of premium, guaranteed. No net distributions. We're not taking out any withdrawals to basis. We're not taking out any policy loans. Here's the actual policy value, less all the expenses. We're going to show you that in a little bit. And we're going to look at the net surrender value. See, these are the guaranteed values. Remember, we're not doing this for cash, so to speak, although the liquidity rider's on there for that buyer's remorse idea I spoke about. And then, of course, $1 million worth of death benefit. Now we get into what I call guaranteed policy assumptions. And here are our real charges. It shows in year one, you're getting the next year, 66, age 67, age 68, age 69, and so forth. It shows the premium outlay staying steady and the premium charge, $779. Notice that stays static all the way into the first 8 to 10 years. Now, you'll see the policy fee at $120, the administration charge, the cost of insurance, the rider charge, if there's any, interest earned, policy value, and surrender charges all the way across the board. It shows you all this so you can map out and see what you got and what your premium commitments are. And notice that even though you're paying a level $12,900 premium, you're actually, the actual inside ART, annual renewable term cost of insurance, is going up every year. So for them, for this kind of idea, if I bought annual renewable term, my actual, probably what I would call crossover time, is going to be between the 11th and 12th year, where the interior ART charge is going to be about the same as the annual level premium. That's why it's important to think about it. When you're looking at permanent insurance, we pay a little bit more over the ART charge, but eventually look at these numbers. The ART charge, we're in the 15th year and it's $23,000, and we're paying almost, not quite, half that amount. Then when you look at these numbers, it gets colossal. Cost of insurance goes from year 17 at $34,000. Now at year 24, it's $103,426. But you're still paying $12,978. That's the beauty of guaranteed universal life. I'm guaranteeing that's the expense charges all in. So all these is a spreadsheet for your entire amount. And then at the very end game, look at these numbers way out. In year 33, you're paying almost $250,000 ART charge. But are you paying that? No. They're doing it at $12,978. They've priced this to play for longevity, guaranteed universal life. Remember, a lot of people aren't into that right now. A lot of carriers have left the market because they don't know how to price this, or they haven't been able to work their shadow accounts properly to make the math work. Lincoln Benefit's in it for the duration. They're staying in here, and they're one of the great players in the second to die GUL market. I've showed you the expense sheets, and if you say, Steve, I'd really like to see this, again, go out to LBL's site, go ahead and download the software, the Eclipse software, at www.lblsales.com/ETW. Remember to order my manual and vocabulary at thebiz at brokersalliance.com, and that's Survivorship Life on the expense sheet.
This has been an Edutrainment Workshop. the educational division of the National Insurance Clearinghouse, the marketing arm of Brokers Alliance, and sponsored by Lincoln Benefit Life, an Allstate company.